Welcome back to the Wealth Management Unfiltered podcast. I'm your host, Justin Sheehan. I'm joined by my co-host, Kaylee Alment. I'm here with the great, one's in Florida, one's in Fort Wayne, Dennis Runkle and Chris Hanna. And we have a great topic today. We are in the midst of tax season 2023. It's an exciting time. We've talked a lot about taxes. It's an important part, a key part of the CPR plan that involves estate planning, tax planning, investment management, and asset protection. Over these few weeks, we've been talking about these different aspects, and today we get to dive into taxes. Chris, how's the season going so far? I know we're right in the midst of it.
Well, yes, we have begun. As we kind of say, tax season is kind of like a flood. When the water first started coming in, you're like, oh, we can handle this. We got this. Some of my new staff is kind of like, this isn't so bad. And we're like, nope, the water's going to keep coming in. Taxes are going to keep coming in. And this week it's really starting to, as I say, get piled up. But we've already, we had our tax team meeting yesterday. And I think they've already gotten out over 50 tax returns this year in about a week and a half. They are working hard, working long hours, and everybody's still very excited and motivated. So keeping that going, and we're open from 8 a.m. to 6 p.m. and on Saturdays from 9 a.m. till noon. Of course, our CPAs and accountants are here a little bit longer than that, but that's what hours you can call in or stop by.
Absolutely. But I think what's cool too, and we talked about this in previous episodes, really our tax season at Wealth Management Accounting starts before the traditional tax season. We're doing all of this work in the previous year, in the year-end reviews to prepare for this, not only prepare our team, but prepare you, the customer, to do the taxes right and maximize the value. And a key aspect to that is the tax planner. We call it the 2022 tax planner for the year we're doing the taxes of. Denny, what is that and why is that unique for our audience?
It's unique because most people haven't heard it before. The difference between tax planning and tax preparation. The difference between reporting history means last year's numbers and actually having a plan that creates wealth. Think about that. How does anybody think about tax planning creating wealth? And there's a great book out there that this is not something Wealth Management Accounting has created. It's been out there for years. And there's a very good book, Tax-Free Wealth by Tom Wheelwright. And we totally believe in this. And this is not where we got it from him. It's just a collaboration of a top CPA in the industry telling this truth. And his number one rule is it's your money, not the government's. But number two rule, and this is so great coming from a CPA, the tax law is written primarily to reduce taxes. Who has that knowledge and is aware of it? And then in this book too, he has right under that, something we can play off on this whole thing is beware of tax advisors who really work for the government. Now, this is out of a book from a CPA. This is not me. I want to make sure. And they say many tax advisors are afraid of the tax law, so they won't learn how to take advantage of the law for you, the client. Some tax advisors are more interested in tax collection and you paying someone to help you pay the most amount of taxes. And the difference between the most amount of taxes is making sure that you never get you're afraid. In other words, how many people would drive to the grocery store if they were afraid that there'd be an accident?
Yeah.
How do you go through life at all where you're afraid to get out of bed because something may happen to that? That's kind of
It's interesting. It's a fear-driven industry, right? It's fear tactics. And we see commercials all the time with saying, we're going to do your tax planning. We're going to reduce your taxes. My favorite is the Super Bowl commercial. Don't do your taxes. It's like, how can I trust you? Right? So with our process, you mentioned the three, right? Taxes, there's so many paradigm shifts. Tax is a wealth building tool. But Chris, let's talk about that paradigm shift of reporting history versus making history. Why planning allows us to make history instead of just report on history.
Well, the planning, most of our clients' goals, obviously, and my goal personally, is again making to pay the least amount in tax possible under the law. Uh, and that the law is not really written in a way that just it automatically happens. There's not a box you pick. I want a tax deduction on my tax return. You have to work through different scenarios, and depending on your business or your personal life, it can be a wide range of scenarios. Though there's different questions about how do I depreciate assets? Do I depreciate it all one time, over time, or are there other options I can use? What's my investment strategy like? Is my investment strategy causing me to pay more taxes on top of my ordinary income or not? Are there ways to reduce my taxes off my investments? There's all this planning that can be done ahead of time as you look at what is happening on your tax return. And that's one thing that our CPAs and myself, as we work together, look at and say, okay, where are areas that maybe income can be deferred, or maybe when they take money out of their retirement, instead of taking it all out of their IRA money, maybe they have non-qualified money that's already been taxed, and we mix it together to keep their tax bill down low. There's all kind of scenarios. You can't go into real specific because there's so many different scenarios, but we're always trying to look at what are the ways to reduce that tax liability for that client as much as possible. And with the reporting history, you're doing everything after the fact. And most of us don't like the plan after the fact. You don't necessarily plan, like if you're going to funeral after the fact, you're already done. You got to pre-plan it. You got to talk it out ahead of time. I just don't, maybe some people do, but I just don't get married to my wife one day and, hey, let's figure out this marriage thing. I think because you get married. There might be a few marriages out there, but generally you date first, you talk it through, you plan what your goals and business are to see if that person's compatible. Well, kind of the same thing with your taxes. I want to make sure my taxes are compatible with what I want to pay, not what the government tells me I got to pay.
If I don't want to take over the host job, but there's a couple of things that is always missing. Chris just mentioned the term qualified, non-qualified. We found the majority of our new clients don't even understand what that means. The other thing that is we have, I think to find a new client that came in with the proper foundation, meaning the tools to help manage their tax liability. They typically don't understand how important the entity they create is, how the structure of the entity, a properly prepared operating agreement. So what's that got to do with my taxes? Everything. And so when they come in, they don't have the tools. They don't understand the options that they can, by the tax code, create a lower tax liability. That's what we call tax planning, to have the foundation, the right entity set up, to be aware of your choices, not accumulate your figures and then say, oh, you owe this amount this time of year, which for 2022, guess what you can do? Nothing. That's tax preparation.
So I have a young gal, about 30 years old, fairly new client. And, she got out of college after her undergrad degree, went to work, went to work for a very famous foundation. I won't mention it, but, received about, and what she put in about $100,000 in her retirement account. And now she's decided to go back and get her master's. So she's back in school, working very little, mainly doing school. And we talked through on how do we do tax planning? Can we do any tax planning? And the conversation comes up, why don't we take some of your IRA money that would be taxable, and let's at least right now convert it to a Roth IRA during the season where she has about a year and a half or two where she has hardly any income. So we're able to convert about, $40,000 to $50,000 over the next couple of years, each year, and she maybe pays only 10% in taxes by the time she gets all done. Maybe 12% at the most, which I think we'd all be comfortable if that was our top tax bracket. So by doing that now, she's locking in a lower tax rate than waiting for, as a lot of people come in to me and say, hey, I want to switch my IRA to Roth, and they're making $150,000, and that would put them in a 24% tax bracket. I mean, yes, you can do it, but you want to pay 24% or more in that tax bracket. Most people don't when we try to give them the numbers, or they wait till retirement. And I don't think anybody can say right now that when we all retire, except for maybe Denny, we're that the tax bracket and tax rate could be what they are now. I think Kaylee and Justin and I will say, yeah, I can only hope they're at 10, 12% on the low end, or maybe 22% on the low end in 30 years, but I don't have any.
Bold prediction, they'll be higher. Really bold prediction.
It's a good bet.
If I would summarize, it's a proactive approach. We're not just, like you said, looking at the numbers. In a way, right now, it's 2023 for Q1. We're doing things and planning really for the following year, because we have to do those things. And in a way, it's sobering that we really can't do anything about 2022 because it is past. It actually gives, I think, motivation to, hey, let's get our stuff together now. This has to be a proactive approach, like most things in life. You gave the example of getting married, or how about building a house? If you build a house without a plan and then try to fix everything after the fact, there's no doubt you're going to lose money. And like building a house requires all different aspects. You need all different professionals, plumbers, drywallers, carpenters. I think that's the same with wealth management. It's not like you mentioned investment management. I don't know if I've heard a CPA or an accountant mention, how moving money from your IRA could affect your taxes. They're just saying, oh, you did that? Great. I'll report on it. And here's your tax liability. Have fun.
Well, and I think a lot of times too, like this young gal, as we were talking through it, they look at it and go, yeah, it sounds like a great idea. Let's move 40,000 over. And I said, okay, that's going to cost, about whatever, $3,000, $3,500 in taxes or something like that. And then how you going to pay for that? You still got to pay taxes on that $3,500. So you got to figure out, is that something that you're going to write a check out of your pocket? Is that something that can be taken out of the investment? What is the best strategy for that person? But you still got to figure out how to pay those taxes. It sounds way better to go from a traditional to a raw, but you still got to figure out how to pay taxes. And then some people, that can be difficult. All of a sudden, got a couple $1,000 tax bill where they haven't had one before, or they just got to find their free cash flow. So you got to always make sure they understand when they make that conversion, how they're going to pay that tax bill too.
And I'm finding through the years that there's a big misunderstanding on cash flow versus taxable income. It is so big, especially our business owners, to understand that they can still create money or cash flow to pay the bills at a tax efficient way. And right there, you just lost 99% of everybody. And the one thing we find on business owners that shockingly missing is a balance sheet. And I know Kaylee and the team, I'm always talking about, do we have a balance sheet on a new client? Well, no, their previous team didn't think that was necessary. The balance sheet many times shows retained earnings. Does the client even know what the retained earnings mean? That's after-tax money that's sitting in the business. You realize we can take, if he needs $10,000 for something, we can reduce the retained earnings and not create 1 cent of tax liability. And the client, that shouldn't be legal. No, it's a part of knowing your numbers, having a balance sheet, and a team that knows how to use those numbers. My clients are just shocked that we can show them how to create cash flow that it's tax efficient. It's just so
and having a balance sheet, and it's another foundational element of not only running a good business, but of doing great tax planning. One thing we talked about in previous week, Denny, was the family LLC component of asset protection. But we also mentioned that the family LLC is foundational for the whole CPR plan. How is that a tool in our tax planning process?
Whether it's your business entity being structured properly or creating a bank, but that's what we call the family LLC. That's the bank. Normally, we want a business entity to have no assets. Where are the assets? That's in our family LLC that houses all the assets. So for the client just to understand where the assets need to be and where they don't need to be also creates tax planning. And we call it building a foundation, and we call wealth accumulation. One of the terms we've used for years is the 4 pillars, which is investment strategy, asset protection, estate planning, and tax planning. So we have one tool that enhances all 4 of those pillars that helps you retain, what we call it to create, retain, and preserve wealth. So that you see the 4 pillars are the foundation of creating, preserving, and retaining wealth. Those 3 areas are different areas in life. Like Justin, you're in the create stage.
Yes.
Chris is moving into the preserve stage. Then the retain stage. I need to keep what I had
Wait, does this correlate with like gray hairs? Because I'm darker. Chris, you're a little mix. And
Yeah, I get it. And obviously how your planning is going to be much different than my planning. And this one size fits all that everybody wants to do just does not work. Unless you're comfortable paying the most amount of taxes the law allows. Whoever really thought that was their desire, to maximize their tax liability? When you do no planning, that's what you're doing. And that's why this statement out of Tom Wheelwright's book is, you have a choice. Take advantage of the tax law, which is the majority of it. I think he makes a statement 99.5% of the tax law helps you reduce tax liability. So that's a published CPA best-selling book that flies in the face of almost everything everybody else understands. How is that possible? Who's wrong? I think the client just needs to be aware of their choices. I'm not saying somebody's wrong. And if you love paying taxes and want to help reduce the national debt, I applaud you. That is not a negative thing if that's your desire. I just haven't run across many people that's one of their top priorities.
supporting the government with making donations to the government.
Yeah.
You know, it's interesting. There's my wife is she's a labor and delivery nurse, and there's this term in the medical field. And if you're a doctor watching this, I'm sorry if I butcher this, but it's called informed consent, where basically medical professionals are supposed to give patients all the relevant information for them to make the right choice. Now it's up to the patient to make a choice, right? It's their life, it's their health, but it's up to the hospital, the doctor, the professional to say, hey, this is what's happening and these are your options. And the patient gives informed consent of what happens. And in a way, that's what we're talking about. We're not going to tell you what to do. We're just going to say, be aware of this isn't a conspiracy or a YouTube crazy video. This is the actual tax code, 99.5% of it, that says you can make wealth. You can reduce your tax liability because that actually benefits the government. Because if you're making more money, that means there's more people paying taxes in a way.
Oh,
that's a secret.
Absolutely. The more successful you are, the more people you hire, the more payroll taxes and things are. When you really understand how it's supposed to work. But yeah, a small business owner seems to be burdened by the highest tax liability because of the lack of understanding when they should have the least.
Yep. Yeah. And so there's so many, and it can be overwhelming for the audience.
It is.
We have a great resource library on our website. You'll see the URL on screen now. There's a lot of information. And if you listen to these podcasts and watch these videos, we're hoping to give you just tidbits of information. If you really want to dive in though, got to meet with our team, and start that process today. It's Q1 already. It's never too late. What's that proverb? It's like, when's the best time to grow a tree? It was 30 years ago. Was the best time. The second best time is now. And so I may butcher that too. We'll do what Google says. Okay. So I want to talk practical tips. So if I'm watching this, I'm not working with you yet, and I'm staring down at 2022, is there anything I could do? Or is it, hey, I just got to do my taxes and then move forward? What can I practically do for this year?
Let's put Kaylee on the spot. Kaylee's a newer member of our team. She's licensed and she really has helped new clients on board with those steps. So would you like to answer that, Kaylee?
I can give it a shot. So for 2022, I'm not so sure we can really go back and change what happened. 2022, it is what it is. I don't know what the cutoff is for possibly moving funds into a simple still. That would be something that, our CPAs would advise whether or not that would be a good decision for our business owners to look into as an option for 2022.
I was looking for you to identify that us to help you get a snapshot of where you are right now, because we're really big on measuring how effective we are on creating wealth. So the first thing, very few people know where they are right now. So we want to take a snapshot to measure how well we do. So when we get a picture where you're at, and there's an onboard system that Kaylee has been instrumental in helping create, simplifying it, because before Kaylee kind of the team jumped in, people would look at all the information we want. They just groan. I got to do all that before you can really help me. And it was painful. Well, Kaylee and the team have helped make that much easier to do. So through Kaylee, and she's so good at helping, encouraging people to go through the steps to get the information so we can literally help create a plan because the client doesn't know where they're at. So that's the first step that we need them hopefully to do, and it's knowing your numbers.
Yep.
So our bookkeeping department is a little bit overwhelmed always because the amount of clients that come in do not know their numbers. So we got to get new good numbers to get a snapshot to create a plan. But you only got to do it once. Because then as you work with us every year, we're comparing our progress. We know the numbers as part of what we do, and we're applying it to the plan.
So
the thing that hard?
it's know thyself, know your numbers so you can build a baseline for success. It's like if I was an athlete and I'm trying to run a 4.3 a 4.3 second 40, and I'm at a 5 second 40, I'm probably at a 7 second 40. I know the gap and I know the progress, but it's hard to know where to start if you don't know your baseline. And so, let's build a snapshot, know your numbers, build the foundation. And as I'm looking towards next year, looking towards this year, what's maybe one practical tip for Chris for this year? What's one thing I can do?
In some sense, everything always circles around the same, but it's different. Meaning, one thing we have our client do when they come in is we want to say, hey, we want to look at your last couple of years of tax returns. You also, when you're going forward, you also have to look at where you've been and look at what the client has done tax-wise, what they're doing in their business, and then going forward, where do you see your business going? I don't know, are you growing? Are you adding more employees? What do you expect your revenue to be this year? As we pre-plan, we have to look at all those options and say, okay, maybe you need to buy more assets this year. Maybe you need to add more employees. Maybe you need to figure out set up a pension plan in your company. So a lot of times like Danny said, it's a snapshot. And for us on the tax side, it's a snapshot every year. We look at where you've been, last year and where you're going this year on that tax return. Because in the end, it's that tax return that tells us what our tax liability is going to be. So we have to keep an eye on what the client is doing. Every client's so different. Again, it's hard to say what that step is, but that's why you sit down with our team and we work through different tax strategies that can affect your business and how you're structured. So one thing is always make sure that you have the proper structure that can help you with tax planning, asset protection, estate planning, and your investment management. And that goes back to what Denny was talking about with wealth management accounting, and make sure you have that foundation of the family LLC, along with other entities that can help you in all those areas. So without that foundation in place, it's hard to have a successful 2023 year.
Chris has brought up something that on the one hand, it's a little bit frustrating. On the other hand, when the client realized that. So we're working with the client for a couple of years, and then all of a sudden they'll come up. I know Chris has mentioned this to me. Some said, my tax liability didn't really go down. And Chris says, let me look at the numbers. Oh, you were successful and doubled the profit, but have the same tax liability, you had half the income. And the client goes, oh, and it's such a great on our annual review when they said, why did you do that? So first, they're not understanding why the tax liability is the same, but the numbers are measuring how much more wealth they've created. Conversation. And we have that a lot, don't we, Chris? You've mentioned how many times the client isn't realizing the effect the planning did until we have that measuring time.
I think that shows that how important knowing your numbers really is. Because without knowing your numbers, you're not going to know your past in order to measure your success in the future.
Absolutely. Great point. All right, Kaylee, we're going to end here on the inconvenient truth. We do this every week. It is a truth that is inconvenient. Kaylee, let's dive in.
All right. So we have all seen the ads and commercials of financial advisors or planners that claim to offer tax planning as part of their services. However, we have found that these claims typically mean that they're referring to a potential product that could create a tax efficiency, not so much of planning and looking into the future. It's just that this one product offers a tax efficient possible income stream in the future. So with that being said, because they don't have the team behind them of the accounting firm and the planning of the estate and the investment management, a lot of the times this can be disappointing, right? Because people are looking for tax planning services and they're not, in the end, getting the full circle. How or why can we offer true tax planning services compared to these typical ads or commercials that we're seeing, whether it's in the mail and email, TV, phone calls?
Well, on my end, I would say because we truly have a tax team. Most time it's a financial advisor. I'm not going to say exclusively because it's not, but most time it's just a financial advisor who is selling a mutual fund, stocks, or some kind of financial product. They really are not actively working with CPAs, a tax team, to do tax planning and then line it up with investments that may line up with that. So it takes that team to really meet that goal. And again, it's not saying 100% of financial advisors that way, but as we all know, most of them are not working with tax team. You work with your CPA, your tax team separately. And that's our strength for wealth management accounting, is that we combine that all together. And that's what makes us more unique than many, many other firms out there.
Awesome.
Awesome. Thank you so much, Chris. Thank you, Denny. Thank you, Kaylee. This has been a great podcast about tax planning. If you have any questions or would like to engage with Wealth Management Accounting, visit our website, fill out the contact us form. We will be in touch with you even during our busy season. We always return our calls. Not a robot, they're actual people. And we're just here to, so we have to say that nowadays. We have to say that. You're not going to get an automated robot AI trying to answer your questions. There's real people. We'll return your calls. So thanks again. The Wealth Management Unfiltered podcast. Like and subscribe it. Follow us. And we'll see you next time.